From the trading desk of dailyforex.com, this is Christopher Lewis looking at the upcoming February 11th Forex session in the euro dollar pair. As you can see, we've had a pretty significant sell off over the last couple of sessions, based mainly upon a few choice words by Mario Draghi, suggesting that the value of the euro was too much for the economy to handle, and that possibly there could be some type of monetary policy needed to be taken. However, this is whining. They didn't really do anything. This has been more or less a reaction. So looking at this from a purely technical point of view, you can see that we've had a nice run up. We really haven't had any significant pullbacks lately, and maybe it was just time to do so. Looking at the charts, though, it's really difficult to sell, even though the Friday candle is very weak. It's a shooting star at the bottom of a fall. That's normally a bad sign. That's normally a sign of a continuation. But 133.50 could be considered to be a bit of a support area. 132, 133, and of course the 132 area here, as I mentioned, 131, and then of course we have the 130 level, which will catch a lot of attention as well. And as you can see, this pair is really tight. There's a lot of places below that could cause problems for the sellers. And this is why I am essentially letting this thing go and do its thing. I'm looking for a supportive candle to start buying again. You can see that you can make a nice little trend line up here. Somewhere in this neighborhood here, you could probably line it up with that support level. And you'd be looking about 132.5. It's going to be difficult to get below that area. Now, let us not forget that as I zoom out, we did break this head and shoulders. So then the question becomes, and assuming that the inverted head and shoulders is still found to be true, there are some possibilities here that we could be looking at. Could we be looking at, instead of resistance at 135, will this end up being, let me use this tool here, instead of that, will this end up being like a thick zone that we finally broke, and now we're testing the very bottom of it? Remember, this measured to 150. That would be a significant move, but that would also imply that the Europeans were going to quote unquote lose the currency war. When everybody's trying to devalue at one time, somebody somewhere has to lose by winning, so to speak. The Europeans will be that group because let's just look at the euro in general. The euro has a long-standing habit of just going up when it really shouldn't. And it's just what people know. They buy the euro, they sell the dollar. Plus, the Fed, nobody can print like the Fed, and the Japanese central bank is well ahead of the Europeans as well. So this pullback could be a buying opportunity, and that's exactly how I'm approaching it. So I'm not willing to sell this pair, but what I am willing to do is look for supportive candles. And again, I suggest that maybe 132.50 or so should be about where we see it, because even if we break the bottom of the shooting star, and this would be a sell signal, don't get me wrong, there's a lot of noise in this general vicinity, so really why be bothered with it? It comes down to taking the trades that make sense, taking the trades the path of least resistance. And this to me looks like there's quite a bit of resistance on the way down. So going forward, I'm going to be sitting on the sidelines looking for that supportive candle in order to start buying the euro yet again.